Really clean read you're looking at Bank of America. Of course, we're seeing net interest income only not come in line with expectations. If you look through the presentation, they also held their full year expectations steady, John. If you look a little deeper, the expectation actually implies 4 interest rate cuts this year. So the question for investors becomes, could it actually be more than investors are currently looking for Bank of America to make this year? Coming into this print, Bank of America was trading more cheaply than the other banks, barring Citigroup. So they were trading at book value. Even Wells Fargo was above this. And if you take a look, not only were the consumer businesses very clean here, as Lisa had mentioned earlier, those provisions for loan losses coming in line with expectations, as well as flat from a quarter ago. So it didn't change very much. The commentary from Brian Moynihan here, very interesting, because he didn't really speak to the idea of tumult, more so just the expectation of a changing economic environment. So trying to keep the tone level set. I would also say something interesting for the people who are watching closely for the consumer loan performance. They did seem to break out the performance of the different loans differently. So you can take a look here. We know that Bank of America, the average FICO scores tend to be a lot higher than many of the smaller banks out there. But you can see how much of them are below 660 as well. And in the credit card business, that's about 12% of the book. So clearly Bank of America trying to guide folks to what the credit quality looks like underneath the hood as they keep trying to eke out more in net interest income.